In the high-stakes world of semiconductors, the US government is making a huge, direct, and really strategic bet. It's actually funding a startup to go after one of the most powerful monopolies in all of technology, ASML's absolute lock on advanced chip making.
So what this move really signals is a brand new phase for the CHIPS Act. This isn't just about building more factories anymore. No, this is about using industrial policy to go right at the heart of the most critical choke point in the entire industry, extreme ultraviolet lithography, or EUV.
But let's be really clear about something right up front. This is not an ASML is dead headline, not at all. For us investors, this is a long-term story, one that's driven by policy. We're talking about a new risk factor, and hey, maybe a new opportunity that's going to play out over the next 3 to 10 years.
And analyzing these kinds of long-term shifts is exactly what we do here at the chip market. We focus on the big picture in the semiconductor and AI infrastructure space.
All right, so before we can really dig into the challenger, we've got to understand the fortress they're trying to breach, right? Let's talk about ASML's absolutely incredible EUV Moat. To put it as simply as I can, when it comes to EUV lithography, which is the only way to make the most advanced chips today, ASML has 100% of the market. It is a pure, absolute monopoly, period. And believe me, that monopoly is incredibly lucrative. Just last year, in 2023, EUV Systems brought in over 9 billion euros in revenue. And get this, the company pulled off a stunning 51% gross margin overall. This isn't just a leader, ASML is the undisputed, wildly profitable king of this whole domain.
But, even the widest moats can have a weak spot. And for ASML, a key bottleneck is the EUV light source itself. The current tech, called laser-produced plasma, or LPP, it's an engineering marvel. You're literally blasting tiny droplets of tin with a super powerful laser, but it has its limits. There are issues with scaling power, with uptime and reliability. It costs a ton in energy per wafer, and it creates debris that can mess with the machine's priceless optics. This is the exact choke point the challenger is aiming for.
And that, right there, is the opening. This brings us to the challenger, a US startup called xLight. And they're armed with a totally different way to create that critical EUV light, something called a free-electron laser. Now, the concept here is a complete 180 from what's being done today. So instead of that whole hot, messy tin droplet thing, an FEL uses a particle accelerator to get electrons going at nearly the speed of light. Then it wiggles them through these magnets, which forces them to spit out a pure, intense beam of EUV light. The key takeaway here, no plasma, no tin, and absolutely no debris. Okay, so the advantages they're claiming are pretty wild. Today's LPP sources are basically one-to-one with each scanner. xLight is proposing the central FEL power plant that could feed up to 20 scanners at once. They're talking about up to 4 times the EUV power, which could seriously crank up wafer throughput, all while getting rid of consumables and slashing operating costs. But, and this is the multi-billion-dollar but, here's the catch. The physics behind it, totally plausible. It's backed by decades of research. The real mountain to climb here is the engineering. Can you take this lab-worn technology and make it run 24/7 with the kind of bulletproof uptime you need in a modern fab? That is a massive, unproven hurdle. And almost for sure, it's going to require some cooperation from ASML itself. And this is where the story gets really interesting. This brings us to the kingmaker. Because this isn't just about a cool new technology, it's about a strategic, geopolitical bet being placed by the US government. The deal itself is, well, it's pretty unusual. The government is kicking in up to $150 million in incentives, but in return, it's taking a $150 million equity stake in the company. I mean, this isn't just a handout. The US government is literally becoming a major shareholder, with the very clear goal of getting a full-scale prototype built and running by 2028.
And the logic here is pure geopolitics. Think about it. For decades, the Netherlands-based ASML has been the sole gatekeeper of this entire technology. So by backing a homegrown alternative for a critical piece, the light source, Washington is creating a lever. It's a tool to cut down on strategic reliance and get a little more say in the future of advanced chips.
So, what does this all mean for the market? And more importantly, for investors like us? Let's break down the timelines and the potential ways this could all play out.
All right, so here's the roadmap. It's ambitious, for sure, but it's clear. The company got started in 2021, and the government deal just hit in 2025. The date you really want to circle on your calendar is 2028. That's the target for an operational prototype. A successful demo by then? Yeah, that's plausible. But getting it ready for high-volume manufacturing, or HVM, that's a much longer, much more uncertain road, probably stretching well into the 2030s. So when you boil it all down, you're really looking at three potential outcomes for ASML. The first, and probably most likely, is the failure or niche scenario. xLight just doesn't scale, and ASML's moat and margins stay right where they are. The second is a partner scenario, where xLight maybe becomes a secondary source, which would reduce ASML's bargaining power a bit and could squeeze margins. And then you have the low probability, but very disruptive, tail risk, a future where a successful FL truly erodes ASML's control and puts real pressure on its business.
So the bottom line, what you really need to know as an investor is this. The base case for the next 3 to 10 years is that ASML is going to remain a high-quality core holding. xLight is a small but definitely non-zero tail risk that you need to watch. It's not a thesis-breaking event that demands you sell everything today.
Okay, so how do we take all this analysis and turn it into an actual actionable playbook? Let's talk about how to position your portfolio and exactly what to be watching for.
The first thing is, don't panic. The guidance is to refine your thinking, not just react. For now, it probably makes sense to keep ASML as a core position. The real action item is to start building a modest competitive risk factor into your valuation models. And think about xLight not as a direct trade, but more like venture capital style optionality. You might even consider a barbell strategy. Hold your core incumbents like ASML while making some small speculative bets on the wider emerging tech ecosystem.
Okay, so what should you actually be watching for? Here are the key signposts. First, the progress on that Albany prototype. Are they going to hit that 2028 target? Second, we need to see real, verified data. How does its actual throughput and uptime stack up against LPP? Third, keep your eyes on ASML. Any signal of formal cooperation from them is a huge tell. And finally, watch the policy. More moves from the US government could pour gasoline on this whole story.
Which leaves us with this huge final question. Is xLight a genuine technological disruption, a true moat breaker that could challenge one of the strongest companies on the planet, or is it really just a new, powerful lever of state power in the escalating global chip war? For now, the answer is probably a bit of both. And for any long-term investor in this space, that makes this a story you absolutely have to follow.